This is Rod White for Mining Journal, and this afternoon I have a special guest, Dominic Frisby. And Dominic is many things to many people, but to Money Week and to his subscribers, he is a judge of value. And right now, in the mining sector, the retail investors and the ordinary people are having a tough time. So how do you think value will be delivered in the resource sector?
Well, I don't know, because I guess value is in the eye of the beholder. And what if you take a typical stock? Can we use the example of Moneta?
You're going to anyway.
Well, it's just a good example. So I bought into Moneta at, I can't remember, $192, something like that, a year ago, and it was trading at $13-14 per ounce in the ground, and that it looked like extraordinarily good value compared to its peers, which were trading at $30-40 per ounce in the ground, and some higher. And so you thought that was great. And then with the work that they've done, Moneta have increased their resource by 40%. It looks like it's going to increase even more when the next resource estimate is delivered. And yet now the stock is trading 30% down, and it's trading at $7-8 an ounce in the ground. So it looked like it was great value. If you liked it at $12, you're going to like it even more at $8.
It's exceptional value because over that period that you've been invested, they are increasing the number of indicated ounces from inferred, which is changing the valuation metric. And technically, Dominic, right now, this company at $2,000 gold is net present value of $2 billion, and its capitalization is 140 million. So it makes no sense at all. But we shouldn't just dwell on one example.
But I want to make a point about it, is that, so the project, as you've just described, is significantly de-risked.
Yes.
But then you look at it from the perspective of an investor, and they've bought £1,000 worth, let's say, and their £1,000 is now worth £700. And you can say to them, well, it's got this, it's got this, it's got this, it had none of these things before, but all they're doing is looking at their portfolio year on, year out and seeing that it's down 30%. Yeah, and so that doesn't inspire further investment.
No, that's a problem for the industry.
It's not just Moneta. We've just used that as an example. I hope you're still going to be alive at the end of this interview.
I hope I get cut with that section. Yes.
But yeah, it's as you say, it's sector wide, and it is a big problem that mining has, because while even just a penny stock, I bought a penny stock last week that delivered a really good PEA. It looked like extremely good value. Bought it at 11 cents. A week later, it's 8 cents. So it's lost 30% in a week. So the problem is that kind of price action doesn't inspire further investment, and so people will go and invest in other areas, and so mining is starved of investment, and so we're trapped in this endless cycle that seems to have gone on throughout all of history, where deposits get starved of investment. That leads to a shortage of metal. Then suddenly metal prices go up, and then suddenly there's an interest in mining again. Well, the problem is mining, metals generally, are not rising like we might hope they would, and this bear market goes on and on.
It's the time frame that you're looking at, and the time frame that investors are applying is too short.
I don't think it is.
You simply have to invest in a quality project with quality management and wait. And when they deliver, it delivers 10 times more than what you'd get from holding the money in cash or somewhere.
Sure, but the reality is, Rod, we're in a digital world now, and everything happens quicker. And I know mining is the most analog. People say that a certain profession is the oldest profession in the world. Well, I imagine mining is just as old.
It is.
Just as old, yes. And it is the most analog industry there is. It's just slow. Everything in mining happens slowly, and that's before you get onto all the bureaucracy and the regulation and everything else you have to go through, and the permitting, which again you're dealing with governments, and that's slow. So it's just slow. But if you're an investor, it's all very well saying you have to be more patient, but how long some people have been waiting since 10 years.
Well, it takes 20 years from a project being discovered to going into production. The time for investment is either at the beginning or at the end. It's not in the
Okay,
middle.
but sure. So then, can you blame capital if there's a 20-year wait, even if it's just a 3-year wait? Can you blame capital for not wanting to go into mining when it can go elsewhere and it doesn't have to ride out the volatility and it's getting its 10 or its 15 or its 20% and it's moving quicker? What it comes down to, Rod, is a basic thing of scalability. And this is why the digital economy has done so well relative to the physical economy, is I can invent one brilliant app and I only need to invent it once, and I upload it to the App Store,
And
and that app can be downloaded a billion times,
in
and
2 minutes.
and I don't need to do anything. Speaking of that, my alarm's just gone off. Um, but
No,
with a mine, you just don't have that.
yeah,
So
but
the relative, as a result, digital attracts more investment. So I don't know what mining has to do to to make itself sexy again, and maybe it needs vastly higher prices for that to happen. But at the moment, mining generally, and this is speaking as someone who invests in mining, and I probably like this because it's probably that I'm talking like this is probably a sign that we're near the end of the bear market. But mining has got a big problem on its hands attracting capital that might go into other industries.
yeah, but mining is going to be the recipient of that capital, or we're not going to be able to live. We can't continue to live without copper, nickel, tin. But you and I can invest in gold and silver and wait for them to get revalued for different reasons. I mean, they're double winners, both from the de-dollarization and from the declining reserves. I hope that the Mining Journal readers enjoyed this interview because we wanted to do something which was not to do with companies. And we have to have the patience to be there to renew our subscriptions.
Well, thank you very much, Rod, and it's always a pleasure talking to you. And I'm sorry if I come across as negative, but I feel you have to be truthful about these things and spell it out in order to address it. And I mean, when mining booms, there's no market like that. There's no market more exciting. Can I plug my newsletter before
It's
we finish?
coming, yeah,
Oh,
but
okay.
no, but subscribers will appreciate this. And Dominic does write a newsletter. What is the plug?
Flyingfrisbee.com.
Yeah, I subscribe. Okay, thank you very much.